Well, good evening, everyone. Thank you for making the time in your evening to listen to me. I appreciate it. Uh, I'm David Paul, and welcome to our VectorVest webcast. It's great to see you all. The title of the webcast is that I'm going to try and show you how to use the proprietary VectorVest technique, the Midas Touch technique, which I believe is the key to finding asymmetrical reward to risk investments on the London stock market and in any stock market, in fact. Okay. And I'm going to try and start with why that's important to our financial well-being. So I think that the sound is coming through okay. There is a little chat box at the bottom. Maybe those of you that are not used to go to webcast, if you can just type something in there, say hello or a big thumb or something, so that I know that you can hear me okay. But I think the sound is coming through okay. Jennifer, thank you. That's very kind. Thank you, guys. Thanks very much. Sound is great. Sound is great. Good, good, good. That's great, folks. Those of you that know me well will know that I find the IT significantly more challenging than the trading. So the first thing I've got to put up, ladies and gentlemen, is the VectorVest disclaimer. We are the only financial software company and certainly education company in the UK that's authorized by the regulator, and that means that I'm not allowed to give one-on-one financial advice. Later in the presentation I'll be talking about shares that I own myself, but I have to make it very clear that although those shares are suitable for me, otherwise I wouldn't have bought them, then they may not be suitable for you. So that said, we can move on, and that's yours truly, okay, approaching 64. Can you believe it? And I've been trading in the stock markets of the world for a very long time. Hello, Jonathan. Started in October 1982 and went full-time in April 1988. And I've been trading on my own ever since. And I have position trades in the stock market running in both the UK and in the USA. I have a long-term set of holdings there, mostly in South Africa, and I have short-term spread bets running in the UK at the local spread betting company at the moment, and I'm hopefully going to look for an entry long of the euro dollar tomorrow. It's just written that down in my trading diary. It's one of my jobs tomorrow. I suppose it's exactly 20 years ago I went to an investment seminar that was being done by a platinum company outside Johannesburg in a little town called Rustenburg. And the speaker got laryngitis. Peter and Doug, you will know the speaker. I won't mention his name, but the speaker got laryngitis. And they asked me to take the meeting. It went well. And based on that, I was asked to go into quite a few large stockbroking companies to actually speak to their traders and coach them on how to become more consistent. And that led to a career in coaching institutional traders and some retail traders. And for the last 10 years now, nearly 10 years, I've been helping retail traders to improve their performance with VectorVest. So that's me. What's required to make a lot of money? And I presume that's why you're here. Well, the first thing, the most important thing, is an exceptionally positive expectancy system. Now, I'm going to define that in a second, but in layman's language, folks, a positive expectancy system is a system that makes an awful lot more when it's right than it loses when it's wrong. Now, as a metaphor for our trading, I would like to ask you this question. Are the casinos in the gambling business? What do you think? Would you like to type something in there, folks? Are the casinos in the gambling business? Bob, you're 100% correct. Bob says no. Definitely not, Neil. You're correct. They are not in the gambling business because the casino actuaries can work out the expectancy, the positive expectancy of all those casino games to about 6 figures after the decimal point. They have got a positive expectancy system, and the longer you stay in the casino, invariably the more broke you become. And this is something you may have worked out on your own. Okay, you can have a run of good luck, but if you hang around, that's all going to go. Now, the slot machines, for example, they've got a 10% edge. All right, that's all. But if you play them, you know that your money goes very quickly indeed. So the casino has got a positive expectancy system. And unfortunately, the punter has got a negative expectancy system. So, ladies and gentlemen, as a metaphor for your trading, you want to be the casino as opposed to the idiot putting the £1 coins into the machine. The next thing we need is disciplined money management. And I've spoken about this at length, and I haven't got time to go into it in detail today, but all I know is that the amount that you risk on any one trade is pretty much the most important thing that I can teach you. If you risk too much on any one trade, let's say that you risk a third of your account in any one trade, and you have 2 bad ones in a row, well, you're down more than 2/3 of your account. And when I first went into the banks, this was in Johannesburg in 1999, 2000, I found that money management was the reason that most of them were not consistent. And I still found that in the city of London 6 months ago when I did some work in the city of London 6 months ago. It was lack of discipline in money management that caused the drawdown. And the third thing is learning how to play the game of trading, having an edge in the market and just playing the game. Now, here's another question for you. At the casino, you're playing blackjack. The little girl playing blackjack, the house has got an edge. If you know the blackjack game, you can get that edge down to next to nothing. But nevertheless, the house has got an edge. And if you don't know the game, or you've got an idiot playing beside you, then you'd be better off to take your £1,000 and go to the bar and buy everybody a drink, because the little girl will not be able to pull pints as fast as you can get rid of your money. My question to you, the little girl dealing the cards, does she ever change the rules? I don't think so. She plays the game over and over and over and over again. The house has got an edge and they play the game, and that's what you need, and what I need is to have the discipline to play the game of trading, to have an edge. The edge could be the Midas Touch. The edge could be something else that we've talked about that you've engineered for yourself. But nevertheless, the key to the exercise is to have an edge and have a process. I talked about this at length on Monday afternoon, and to keep playing the game over and over and over again. And one of my dear friends here in London, a guy called Zach Meir, who interviews me on Core Finance, we were talking about this on Saturday, in fact, at the show. And when it's going well, it can be very, very boring. So those are the 3 things that we need. Here's a little question for you again. You browse the internet and you see a system where the system promoter says that he's right 90% of the time. I'm not questioning that in the slightest. He's right 90% of the time. Now, I saw a system like this advertised by, and they were charging $3,000 for the system. In the States, there's actually so many systems being sold for $3,000 that somebody is presently writing a newsletter. It's called Club 3000, which rates all these systems. But in his own literature, this fellow says that he's right 90% of the time, but he risks 90 units to make 10. It was a Forex system he was risking 90 pips to make 10 pips. And he was charging $3,000 for that. Now, that 90% sounds really, really good, but folks, look at the sums. On 10 trades, it's not so good. Because when you're right, you make 9 times 10. You're right 9 times out of 10, so you make 90 pips when you're right. But unfortunately, in the ones you get wrong, you lose 90. And 90 minus 90 when I was at school was 0. So you end up, even if you've executed that system perfectly, you end up flat. Now, with clammy hands and spreads and all sorts of ghastly mistakes that we're prone to, that will lose money. Now, let's consider another system. A system that's right 60% of the time. But this system risks 10 units to make 90. And the sums on this occasion are very profitable indeed, in that when he's right, he's only right 6 times out of 10, 6 times 90, 540, minus 4 times 10, which is 40, means that in 10 trades, he makes 50 units. Now, this is saying that if you were to risk £1 per trade, that you're going to get £5 back on average. And that, ladies and gentlemen, is a positive expectancy system. And it's a highly positive expectancy system. Now, expectancy in trading is exactly the same as margin in a business. If you've got a business with tiny, tiny, tiny margins and you stuff up, you're gone. And that's why brands spend heaps and heaps and heaps of money, and you pay for that little crocodile on your t-shirt. Okay. Because with a little bit of margin, the business model becomes significantly more robust. And it's exactly the same in trading, folks. The higher the expectancy, one, the more money you make, and secondly, the more robust your system becomes. In other words, if you make the odd mistake, it doesn't matter nearly as much. In the previous system, if you make a mistake here, well, you are dead. Okay, so and I'm going to get my pen out. You know what I'm like with pens. Expectancy, and this is much more difficult than it looks. EXP. The word expectancy first put down on paper by an American psychologist called Van K. Thorpe. And this is a function mostly of reward to risk or risk to reward. It's a function of hit rate. And my word, are we paranoid about hit rate? And I understand that. We don't like to be wrong. But it's not that important. And of course, spreads. And brooks. And if you're a short-term intraday trader, folks, first of all, the risk to reward is not good. And of course, you're trading one hell of a lot, which means that you pay an awful lot of brokerage. And the risk to reward rarely gets above 1 to 1.5, maybe 2 to 1. And an intraday trader that's got a system that's right 50% of the time, that makes twice as much when it's right as it loses when it's wrong, that chap would sell his granny for a system like that. So what we're going to try and talk about tonight is how we can actually use a fairly simple, straightforward technique to engineer these trades. Now, this is the type of trade, and I'm very proud of this trade because the trade was in fact done on Core Finance, and I called that with Zach down there. Now, this is Gulf Keystone Petroleum, and as you know, in this period to the left here, GKP had fallen off the side of a cliff, so there was eyebrows. Zach's got a wonderful big thick pair of eyebrows, and the eyebrows were lifted here. But that trade and the Midas Touch, I'll show you in a second, got us in down around there, and then all of a sudden got us out when the VectorVest sell signal kicked in somewhere about my arrow just about here. Now, that was a 9-to-1 trade. The risk was, I think, 15 pence from memory, and the reward meant that I made 9 times more than I risked, and that's the sort of trades that we're looking for, because that's where the big money is. Now, the Pareto principle, ladies and gentlemen, kicks in, and without a doubt, 80% of your money comes from 20% of your trades. So if we're using the Midas Touch system to find these trades, I think that we would have 4 bad ones, we'll have 6 good ones, and out of the 6 good ones, we'll have 2 like this. And the rest will be 2-to-1, 3-to-1 type trades. In other words, they don't make this sort of run. So not everyone will be like this, but I think that 20% of the Midas Touch trades will be large trades like this. And I'm going to show you the construction of the Midas Touch if you don't know it in a second, but it was designed by Dr. Bartolito to try and filter out the noise and focus on these big moves. And as you know, I'm currently long of Gulfstone. Well, some of you know that I'm currently long of JKP based on another Midas Touch signal which came in somewhere about here, and that trade is doing fine. A little bit of noise, the same as we had here, that we've got to get through. Okay, the oil price streaking up the page today. So that's what we want to try and achieve. The most important thing that you can focus on in any form of investing stroke trading is asymmetrical reward to risk. It's much more important than hit rate, although our egos focus on hit rate all the time. So at this juncture, folks, any questions about that? I think that a metaphor for your trading stroke investing business, that you are the casino, is such a wonderful metaphor. And that you are certainly not the guy putting £1 coins into the machine. The casino's got a positive expectancy system, and the guy putting coins into the machine has got a negative expectancy system. The longer he stays, the more broke he becomes. He may have a run of good luck in between. So your job is to find a positive expectancy system, get your money management right, and then just play the game over and over and over again. I think that the Midas Touch system will have a hit rate of about 60%. And within the 6 that it gets right, 2 of those should be those big 8, 9, 10-to-1 trades. I'm going to show you some of them now. So I'm not trying to paint a false picture here. I've done an inordinate amount of work on the Midas Touch over the last month, and I couldn't be happier with the results. I really couldn't. Yeah, Lloyd, it does get in with Lloyd asks, seems that most of the Midas Touch searches pull up trades that have already run. what we're looking for is for them to run a very, very long way, Lloyd, after that. If you have a problem getting in with the Midas Touch watch list, we have a watch list called Midas Touch Prospects that I'll be talking about a little bit later that gets us in earlier than that. Let me answer that question, Lloyd, in the presentation itself. But our objective is not really to be right, Lloyd, but to actually find there was a little bit of a pullback there, as you can see. Midas Touch didn't, in fact, react to that pullback before it moved up the page. So I'm not saying, Lloyd, for a second it's easy. Okay, that when you're sitting through that little bit of a pullback. But all I'm trying to do is to impress upon you that by ignoring the noise and getting these big 8-to-1 trades, that's where the money is, in my humble opinion. Okay, and 2 out of 10 should be those type of trades, if you follow what I'm going to try and put across. So with the Midas Touch technique, there's 3 simple steps. What to buy, when to buy it, and of course when to sell it. Those of you who have been at this for a while will know that knowing when to sell is a very difficult exercise and largely a philosophy. And unfortunately, it's sometimes they all go bad on you. Sometimes I tell people that just expect that they all end badly. Then you'll be just fine mentally. So this is Jerry. Jerry, who is a senior instructor at VectorVest in the US, and he makes this. He's a basketball player. He's about 6'19". The best defense is offense. I think Sir Alex used to say exactly the same thing. Trade in the very best shares, and those shares with the best combination of value, earnings growth, and earnings safety. Now, I've done an awful lot of research over the years, and the thing that has the highest correlation with the share price rising is earnings per share growth. Okay, so earnings per share growth exceptionally important, and that's Dr. Ledo's little metaphor. He says that good portfolio management starts with buying the right stocks, and we firmly believe at VectorVest that every investor should know what's the stock really worth, how safe is it, and when to buy, sell, or hold. And those of us that are very conservative, that don't like surprises, would be favoring undervalued stocks, stocks with a very safe track record. Okay, those of us that are a little bit more adventurous, that are happy to manage risk with stop loss orders, could certainly pull down the safety requirements. So VectorVest puts value, safety, and trend together into one master indicator, and all of the shares on the London stock market and on AIM and on any stock market VectorVest follows as a default are sorted by the master indicator VST, value, safety, and trend. And as we'll see in a second, the default sort for the Midas Touch watch list is also by VST, and that seems to do a good job. So we calculate a stop loss for every share in the market every single day, and the stop loss is very important to tonight's discussion and to the construction of the Midas Touch. It's based on a 13-week moving average, 65-day moving average of the closing price. It's adjusted, ladies and gentlemen, for the fundamentals. So if the fundamentals of the share are good, we widen the stop loss. Now, the fundamentals as defined by RS, relative safety, and value, relative value. So if those are good, the stop loss is further away. We give the share more wiggle room. If those are not so good, we tighten the stop loss. So and a stop loss is calculated for every share every single day, and that's shown graphically by the recommendation. If the price falls below the stop loss, then that recommendation that I showed you in GKP, that goes red. So we put a buy, sell, or a hold to every share in the market every single day, and that's the red that we saw where the price fell below the stop price. Now, Jennifer asked me a question earlier on, which was a really, really good question about market timing. That's the UK market, folks. And there is a safe time to be in the market and an awful time to be in the market. And the confirmed call methodology told us that it was time to be very careful in the London market on the 5th of October, and that was certainly the case. And it said it was safe to be in the market from the 9th of January, and that's been a great run up the page, which is still going. So VectorVest advocates favoring shares that are undervalued, shares that are growing their earnings safely, that are rising, and we want to buy them when the general market is rising. And the market timing system tells us that automatically. So if I now go to the front page of VectorVest itself, discard all my things, and that's the situation that we have after the close last evening. These two words represent the trend situation, and up means that the short-term trend is up and the long-term trend is up. And that has been confirmed by price action, and this confirmed up has been up since the 9th of January, and it's still up. And the advice is that VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. So Jennifer, that question you posed, I think as long as the pointers and the advice is positive, and that the primary wave and the underlying trend and a confirmed up are all saying yes, then I think that you can certainly buy stocks and do exactly what it tells you. So for most of us, folks, we're looking solely at this confirmed up. Is it confirmed up? Is it a confirmed down? Now, if the market should turn down, there'll be a red confirmed down there. So I firmly believe that we should be buying stocks when we see a confirmed up, and the advice here is positive. I don't think you need to do anything more than that unless you're a swing trader. And at this particular talk this evening, we're not talking about swing trading. And that you can see on your telephone. I don't care how busy you are, you can actually tell exactly what the trends are on the market. As you can see, a few days ago, we had down up for a week or so as the market pulled back, and then after the 29th we went up, and that advice has been fairly positive for the last 3 days now during this period. So Jennifer, yes, when you see the advice is positive, primary wave is up, and that we've got a confirmed up, then I think that you can buy stocks. Okay, so I firmly believe that market timing is 70% of the exercise. And that was brought home to us clearly in October, November, and December last year, where as this market was falling, it was exceptionally difficult to make any money buying stocks. I think you would all agree. And since Christmas and New Year, when the Fed blinked, we've now got a situation where it's been fairly easy to make some money. So the most important thing to know is whether the market is rising or falling. Everything follows from that. Such a great line of Bartolito's. Everything follows from that. So fairly simple, fairly straightforward. VectorVest does all the hard work for you. You've just got to keep it in control. The first thing that I do every single day in my trading diary, right at the top of the page in the morning, before anything else, is that I write down the trend situation from the program. And although we can project the future and we can count waves, the only reality is what the front page of VectorVest tells you. Okay, that's the only reality. Anything else is largely an ego-based projection of what we think it might be. So let's trade the market and not the forecast. And the market is what the front page of VectorVest says, in my humble opinion. So let's move on to the Midas Touch itself. And the Midas Touch, it's called the Midas Touch because Dr. Dlado put it together to trade the American Gold Bugs Index called the Huey, which is a notoriously volatile beast that moves in many multi-year cycles, but it will do its best to get rid of you frequently. In other words, savage pullbacks within the trend. So we designed this to try and find exactly what we want to try and do, is to ignore the noise and stick with the share so we can get those big 8 to 1, 9 to 1, 10 to 1 risk to reward trades. Asymmetrical risk to reward or reward to risk is where the money is, in my humble opinion. And the mathematics point that out. So I think that it's vital that any system that you use has to work. It's got to make more money when it's right than it loses when it's wrong. But it must be easy to use, and objective to use, so that you can actually focus on execution as opposed to scratching your head and counting waves or any form of subjective system. So this chap, Colt 45, this was his handle in a trading competition, and he won the competition with this technique. So it's a 10-day average of the stop, not the price. And remember, the price is itself a 65-day moving average. So it's a 10-day moving average of a 65-day moving average, and a 65-day moving average of a 65-day moving average. So these two moving averages of moving averages act as a double smoothing, and it mathematically smooths out the noise. And then to work out momentum or rate of change of the price, we use the VectorVest RT, but it's very noisy. So for this technique, we use a 40-day moving average of the VectorVest RT. Now, what is momentum? Well, folks, you've all got a momentum indicator in your car. It's called the speedometer, and it measures the rate of change of distance, which is speed. And if you're in your car and you're speeding up, there's a higher probability that you're going to keep going forward than if you're slowing down. And that's what momentum really says. Okay, so we measure, is the price speeding up or slowing down? And if the price is speeding up, like you in your car, there's a higher probability that you're going to keep going, and it is a probability. And I've done a lot of work on divergences between the price and the RT40, and they are a leading indicator, and I've spent weeks on that. So 4 rules to get into the Midas Touch watch list. So the 10-day of the stop must be above the 65, and both those must be making 3-month highs. The 40-day moving average must be above 1, and it also must be making a new 3-month high. And if that, Lloyd, that's why you probably mentioned that earlier. If those criteria are met, then those shares are grouped into the Midas Touch watch list. And I'm going to show you that watch list is before we go into the charts itself. So if I get rid of all my scribbling again. Go to viewers, go to cherry picking, and click on Midas Touch stocks. And there they are. All of those stocks, the 10 period of the stop is above the 65, both making 3-month highs. The RT40 is above 1, and it's making a 3-month high. And those stocks, those are the stocks that are in and lots of them at the moment, because the market has been going exceptionally well. If we look at, for example, Micro Focus, that's had a cracking day yesterday. I'm moving up the page strongly, as you can see, my little lines here. If I put up the Midas Touch layout, so click on layouts, just go down to Midas Touch, and there it is, and get rid of all my lines. It's a great affliction being a technical analyst. And as you can see, there's a 3-month chart, and the RT40 is certainly making a 3-month high. This is certainly making a 3-month high, and that is making a 3-month high. So it's in the list. Now, I'll be talking about how to trade with the Midas Touch watch list. And as Jennifer said, it would have been better to have bought those on the confirmed up, which came in somewhere around here. I've got to put the price on first to see that, I think. Somewhere in here. Yeah, just there. All right, just there. I have to put the price on before it'll put the confirmed call. That was the confirmed call up just there. But it's going strongly. Breaking new highs here. 9th of January, yeah, 9th of January, Jennifer, that was the magic day. All of these confirmed ups and downs are sort of imprinted on my soul. They're so important. I firmly believe that that little thingy is 70% of the exercise, that little triangle. And if that triangle is up and the advice from VectorVest is positive, then we get strong moves in the marketplace. That's the Midas Touch watch list, folks, and it's a superb place to look for trading opportunities. I'll talk about that in a little bit later, but certainly it doesn't take a great deal. For example, in this little company called Clark, I spoke about it Monday afternoon. It's been in the Midas Touch watch list for since February odd, and it pulled back to here, and it's been on a buy since here as well. Okay, it pulled back to here, and a fairly simple entry back at support would have got us into that. So Lloyd, if you're not happy with just simply buying the Midas Touch watch list, then looking for fairly simple entries will make you some money. Okay, and I'm going to address that in about 10 minutes time. Well done, Jonathan, that's great. I'm not quite with you there, Lloyd. If you click on confirm calls, the confirmed calls from the overall market will be imprinted on each stock. And that's the last one there that happened on the 9th of January, just there. All right. Does that make some sense? If you're new to VectorVest, there's a lot to take in, I know. It may not have been in the list, Lloyd, at that time. You're right. It may not have been in the list at that time. Okay. May not have been. May have only come into the list after the confirmed call happened. Quite so. So the Midas Touch watch list is dynamic, and you need to keep your eye on it. That's for sure. Looking for trading opportunities. And this chart, in fact, only came into the Midas Touch watch list at the start of February, Lloyd. You're quite right. Somewhere about here. And then I waited and bought into it just there. No, Lloyd, from me selling VectorVest, there's such an awful lot into it, and it confuses people. That's for sure. Because there's just so much in it. And I've said to people many times, it would be easier to sell if there wasn't nearly as much in it. But that's what makes VectorVest so special, this integration of technical analysis and fundamental analysis. So I now want to move a little bit further and have a look at some of these. Now, I said earlier, folks, that out of 10 trades, I reckon, and I'm not overselling this, I reckon there's going to be 6 out of 10 that are good ones. And out of the 6, there's going to be 2 crackers. And that's what my research tells me. And I'm more than happy if you were to repeat that search for me. But this is Anglo. And Anglo, in fact, made a low. And it gave a Midas Touch buy somewhere down around here. Now, at that period, the 10 crossed above the 65, and the RT40 moved above 1, and somewhere down around here, it got into the Midas Touch watch list. Now, as we'll see in a moment, we have a methodology of finding these early. It's called the Midas Touch prospects, which will give us a heads up when the 2 averages cross and the RT40 moves above 1. And that will get us in early, and Lloyd, hopefully that will help you out of that problem of yours. But this moved from £4, I think, on that to 12 odd. So I think the stop loss there was about 50p. So that was a 16 to 1 risk to reward trade. And you don't need many of those. I reckon that the technique will give us 2 trades out of 10, which are 5 to 1, 6 to 1 plus. So that's the first trade in Anglo, and these trades were done on Monday afternoons. The market then pulled back a little bit, and away it went again. And this time it wasn't a 16 to 1 trade, but I think it was a 6 or 7 to 1 trade. And then it pulled back, and now the ball is in, and the game is on again. That's the 3rd trade in a row using the Midas Touch watch list. I got very excited about this initially, I think, about 18 months ago, because we have a group of traders in Cape Town, investors in Cape Town, and senior mining men mostly. And they're not short of a few bob. And they get together once a week and they apply the Midas Touch with incredible results, very simply, mostly in mining orientated shares. And that's why I got so excited about it. So that's, and that's Fever Tree. And Fever Tree, in fact, hasn't quite given a 3-month high yet, but it is in the Midas Touch prospects watch list. The last trade was a 10 to 1 risk to reward trade in Fever Tree, and it then pulled back quite savagely from here, and it came into the Midas Touch prospects watch list the other day, and we talked about it, in fact, on Monday afternoon. So I'm looking forward to a big trade in Fever Tree, and I may have a gin and tonic later on just to push it on its way. So that's the technique, folks. Now, divergences between the price and the momentum RT40 are very strong leading indicators of change, and I've spent a very long time investigating those. And those will be taught in lesson 3 of the course that I put together. Okay. Hello, Diane. Diane's our Elliotician. How are you? So I have now to move to conclude this, and I've spent a very long time on this. And I'm very excited about the ability to be able to show people how to make a great deal of money relatively simply and easily. It is a hands-off system, and Lloyd talked about late entries. It is a system that I think that you can use in your SIP or your ISA. It's going to take a few minutes a day to keep it under control. So I think that you could easily use the Midas Touch type system for a large percentage of your wealth, as those guys in Cape Town are doing. And then maybe have 20% that you would use for short-term or shorter-term swing trading. And in lesson 2 of the Midas Touch course, I'm going to show you how to do that with the Midas Touch watch list. So you're going to get it all in one course. So you got a choice. You got to do it yourself. And that was me trying to make some sense of the annual reports. I failed. I failed. Just remember, at VectorVest, we advocate putting the best of both worlds together, the best of fundamentals and the best of technicals. And just remember that the price doesn't go up the page because of moving averages. It goes up the page because the company is going to make more money next year than it did this year. Okay, so earnings per share growth is absolutely vital, and VectorVest gives you a forecasted earnings per share, and if that's in place, it greatly increases the probability that your technical trade is going to be a winner. And much more important than being a winner, a big winner. Those big, we want to try and find those big 6 out of 10 will be high risk to reward trades, of which 2 of the 6 will be 8 to 10 to 12 to 1. So, and that's my objective. That's my objective. So, break out, and I've put this together. It's 3 modules. The first module is all about market direction. Okay, how to know when the general market is rising, and how to know the very, very best stocks to buy. Now, the second module is about the Midas Touch construction and the watch list, the detail of it. And then, Lloyd, to answer your question of how to take the Midas Touch watch list and how to finesse accurate entries from the Midas Touch watch list. You're quite right. When all 3 metrics make 3-month highs, that could mean that the share has run too far and is currently overbought. And although it may be appropriate for a long-term position trade, it certainly wouldn't be appropriate for a swing trade. So I put together 4 cutting-edge techniques that will get you in at a really, really good place to try and answer exactly that question that you posed earlier, Lloyd. Okay, so that's what we're going to do in module number 2. And module number 3, we're going to answer the question of how to get in right at the turn using the Midas Touch prospects watch list, which will get us in when the 10 crosses above the 65, when the RT40 is just about to come up through 1, when the share is making money with reasonable safety. And I've added a safety criteria to the Midas Touch prospects watch list in my own trading. In that particular lecture, we're also going to look at risk management, and we're going to look at portfolio construction in that particular lecture. Okay. Now, with the 3 learning modules, we will also have a mastery session for each one, where I will in fact go through the material with live examples and take your questions and make sure that you know exactly what I'm talking about. Lloyd, that's a difficult question. Lloyd asks, if we were starting a portfolio from scratch now, would you wait for the next downturn and subsequent? That's the second time I've been asked that. Lloyd, I would be a liar if I said I knew an exact answer to that. But I think that at the moment, we've got it confirmed up, and the advice is good. So I think that it's appropriate to stick your toes into the water. Okay. It would have been better on the 9th of January. An awful lot of people missed that, because I assure you on the 9th of January, we'd only got over from cutting our wrists at the end of December. And I said that for weeks, that these things always turn when you least expect them to turn. So in my Midas Touch Trading Techniques course, I'm going to focus on finding high reward to risk trades with a reasonable hit rate. And to do that, we've got to focus on market direction. We've got to focus on finding the very best stocks that are growing earnings strongly and reasonably safely. The Midas Touch watch list provides exceptional trading opportunities for short-term traders. And that trade that I spoke about in Clark a few minutes ago is an example of how one could have actually got in to Clark. It was in the Midas Touch watch list from the 1st of February, but it ran a little bit too far, a little bit overbought, and certainly in swing trading, especially if you're going to swing trade with leverage with the spread betting company, you need to get in at a good level. So I put together 4 techniques to show everybody how to do that. And these are not techniques that I've dreamt up, folks. These are techniques that I've been using for the last 30 years, and they work. In the last session, I think the most exciting session, which is getting in right at the cusp of the turn using the Midas Touch watch list. And that's what I've planned. Hello, Bill. How are you? I will be giving Bill 3 mastery sessions, and then I would plan follow-ups during the course of the year, certainly, yes. And you've got access to me between now and death. I'm not going anywhere. So I'm 64 now, and I'm hoping I'm going to be around for another 25 or 30 years, God willing. So until I hit the final 5th wave, you've got access to me, okay? Answer questions. So each week, folks, I will add around 15 minutes of thoughts and actions on how to play the game of trading. Remember, 3 things we've got to have. 1 is a positive expectancy system, and I firmly believe that the Midas Touch is an exceptionally positive expectancy system. Getting rid of the noise and finding those big 8, 10 to 1 trades. That's where the money is. And my word, when you actually nail one of those, you feel so good. The second point is managing your money well, which we'll cover in detail in the course. And then each week I'll add some thoughts on how to manage yourself well, how to play the game of trading. And by putting those 3 things together, ladies and gentlemen, you can position your trading business as the casino, as opposed to the idiot that's putting the pounds into the slot machine. Okay. I hope so, Jonathan. And folks, here we've got for you 3 weekly lessons recorded, 3 live mastery sessions also recorded. If you're not a VectorVest member, we allow you access to VectorVest UK and VectorVest USA for 30 days. Full access to Pro Trader and Auto Timer for those 30 days. Helpline support and weekly Q&A meetings. And we've also got user groups around the country that you'd be more than welcome to come to. Okay, user group in London, Guildford, Oxford, Taunton, Birmingham, Manchester, Edinburgh, Belfast, and Dublin. So, I do my best to try and get to as many of them as I can. So, folks, for that, and it's a lifetime's commitment, the normal price at VectorVest is £395, but I pushed them to bring that down to 295, and they say that they'll hold that for the next hour or so. but the US price is, well, it's normally in dollars, but at £395 for the next hour or so, it's been reduced to 295. If you go to vectorvest.co.uk/Midas Touch, you should find the landing page. Okay. And I look forward to working with you. The course will be starting the week after next, and then the mastery sessions will be starting. I'll tell you exactly when they are. The 17th of April, the 25th of April, just after Easter, and the 1st of May. Those will be recorded. Okay, folks, I've kept you probably longer than I wanted to, but it'll be great to work with you. Just remember that that reduction in price is for the next hour or so, and then they're going to put it back up to the US price, which is dollars rounded down, which is 395, whatever that is in dollars. It's £295 for the next hour or so. Great to chat to you all. I'm running the same thing again on Friday lunchtime. If you've got any more questions, then please jot them down, and we'll be running the same thing on Friday at lunchtime. All right. So, those of you that come to the Monday afternoon meetings, I'll see you next Monday. And anybody that's at the Master Investor Show, folks, please come and say hello to Susan and myself on Saturday afternoon. Thanks very much indeed. Take care of yourselves. Bye-bye. Cheers, everyone. Bye now. Yes, Clive, there'll be a recording. And I'm going to. It takes a little while to get the recording up there, Clive. I'm hoping I'll get it across to the US, and they'll put it out probably in a couple of hours' time. It takes quite a while for the machine to actually upload it. Cheers, everyone. If you don't get anything else from the evening, just think that trading is not about being right. It's about this mixture of being right and engineering huge reward to risk trades. Take care of yourselves. Bye-bye.